This is Eric Mwada with Mwada.com. It is December 11th, 2012. We are looking at a market that is called up about 1% on the NASDAQ, 0.65 on the Dow, about an hour into the day's trading. Now let's go back and take a look at one of the best performing sectors in 2012, and that is the home building sectors. We're going to take a look at the XHB so we can have an idea or try and understand why this was one of the best performing sectors in 2012. If you go back to January 2012, you're going to notice that this instrument here was just breaking out or attempting to break out of the month of January. And you also see that the RSI was just making a new high right there, blasting to a new high right there, which is something it had not done in many years. And this is a 3-year monthly. And we also see that the MACD, the main MACD, was getting very close to breaking into a 52-week or a 3-year high. So you have the RSI pushing to 3-year highs, the MACD pushing to 3-year highs. Now you move back into the month of February, and what you notice that now we successfully broke out on the monthly chart. It's a powerful breakout. You got your RSI now trading at 3-year highs right there. And also you see that your MACDs are now making a 3-year high. Just about there, moving to a fresh 3-year high. So that being the case, you would have known like we did, and that's why we've been playing the home building sector most of 2012, is because that breakout met the 2 minimum requirements for great moving sectors and stocks. So you never know what's going to happen into the future, but at least what's happening in the here and now in terms of the technical picture can help you understand that there's a change in sentiment and a sector is breaking out and could become the leadership sector. Now let's go to what happened here. This is now the movement in 2012 for the XHB. Had a nice run, and like I said, was the leadership sector in the market for most of 2012. As of today, I want to take you back now, and this is now actually a current chart for the FAS, which is a 3 times financial bull ETF. Now what I want us to pay attention to is the fact that if you take a look at the RSI, we are now at an all-time high as far as this instrument is concerned. Now this instrument started trading in late 2008, but this is the most it's ever traded on the RSI. What that means, it's the most bullish this instrument has ever been, and this could suggest that the financial space could be back in play. Also notice that it's now moving above 109.15, which is the highest monthly close going back till mid of last year, which is 2011. So 109.15 is the highest monthly close going back 2.5 years. As long as it stays above that level on a monthly basis, this could be the next leadership sector in 2013. So we need to watch that. If it holds above those levels, you really have to pay attention. Also, even though the MACDs are not close to new highs, we still have to consider that the RSI is doing very well. Now, the only problem that I see with the FAS is that the weekly chart has yet to break out. So for this thing to work, you can see it's now starting to move higher here. You can see that the trend lines are also moving higher, which is what you want to see. Trend lines are moving higher, pointing in the right direction. So the momentum is to the upside. You'd like it to break out and hold above 117.49. If it can break out above that and hold above that, then that confirms that yes, there's something changing as far as the financial sector is concerned. The financial sector has been out of favor for a long time. But for this to be successful, we needed to hold and break out above 117.49 on the weekly. The monthly is doing what it needs to do. The monthly is already showing us signs of life, and that's holding above 109. So that's the beginning. We'd like the weekly to follow through and break out above that level of 117.49. The other problem is now if you take a look at the XLF, which has a longer trading data, you see that on the monthly, the XLF has yet to break out above 16.38. For this to truly become one of the leadership sectors in 2013, it needs to break out and hold above 16.38. Right now we are trading at 16.08, so we are ways off that, about 30 cents. We could get there, but we cannot have a major move in 2013 unless we blast out of that area. Already I'm taking a look at the RSI. It's at an all-time, it's at the highest trading level since late 2007. So in other words, that tells me the financial sector is at its most bullish since 2007, and that's saying a lot. So we cannot just assume they are going to be underperforming the market with that kind of a chart. If we take a look at the MACDs, you see that the MACDs are also trading at multi-year highs. That is trading at almost a 4-year high as far as the MACD is concerned. And you see that the other secondary MACD setting right there is very close to breaking out to what would be a 4 or 5 year high. If it can push above that level, then that's going to suggest a 4 to 5 year high. But the price does need to move above 16.38. The idea I have for you, and remember, we've been playing Bank of America just as a side note, because we talked about the fact that if it held above 9.95 on the monthly, it could do well. It's already doing well, up about 8% this month. But what is important is the fact that the RSI is now pushing above 50, which is something it has not done since late 2007. So Bank of America is at its most bullish since 2007. We cannot ignore that kind of a chart. But the idea I had for you was a GHL, which is Greenhill and Company. And I like it just because it's very early on in its trading. You can see it needs to hold above 51.26. That's our buy point, because this is the highest monthly close going back to mid 2011. So you want to own it as long as it holds above that level of 51.26, which would suggest a breakout, and I would give it a price target of about 90 to 100 sometime next year if the market stays stable. What it needs to do also, and this is why I'm saying it's a little bit early, is it needs the RSI to move above this dotted line. In other words, it needs to make a 3-year high. But it's, as far as I can tell, a little movement here and it breaks out. So it's, like I said, early as far as this one is concerned. And you see that the MACD is already making the MACD is already at a 3-year high. So take a look at this one. The main chart that I want us to follow on this one is the monthly chart, 51.26. I think this one does well if it can hold above that level. Just so we can take a look at the weekly chart, you see that the weekly still needs to break out above 52.10, which is the highest weekly close going back to summer 2011. But for my money, this is a chart, because we are trying to hold this one for many months, because the financial sector is just starting to break out. You want to own an early breakout so you can ride most of the bigger moves down the road. So take a look at this one, GHL, buy point 51.26. We'll see how things settle out. If this market is trying to fake us, then this breakout will not work and it's going to move back below that 51.26 level. Always use your 5% to 10% stops so you can protect your capital. This is Eric Muather with Muather.com. I'm also looking at the other financial stocks like the UBS, the RBS, the UBS, I think. That one, RBS. RBS. I'm looking at Goldman Sachs, MS. I'm looking at your regular names to see whether they also break out. Citigroup also looks very close to breaking out. AIG, Remember, all these things have been out of play, but if those financial monthly charts break out, these names are going to be the money makers in 2011 or 2013, excuse me. Eric Muado, mother.com. Peace and blessings.